There is a major crash happening right now in the Florida housing market, and almost no one seems to be talking about it. Prices are dropping, inventory is exploding, and we could be on the verge of a 2008-like crash here, with values dropping by 20, 30, or even 40%. While in the Northeast and the Midwest, prices remain relatively strong, the southern markets are currently unfolding as we speak. And nowhere is this more true than Florida. Anywhere you look in the state, prices are down. In Lee County, as an example, the typical single-family home has lost 8% of its value in just the last 12 months. Now, 8% might not sound like a lot, but this is the same pace as the start of the '07 crash. And this line going straight down doesn't seem to be stopping anytime soon. All the metrics are pointing to further losses in the near future. Why? Well, we don't know the exact reason, but we do know that real estate tends to move very slowly, then all at once. Prices are usually the last thing that gives out in the market, but here in Florida, that domino has already fallen, and price movement in real estate is very hard to reverse. Inventory, which is the easiest way to look at the health of a market, is exploding. In Pinellas County on the Gulf Coast, one of the most popular post-COVID destinations in the South, there has been a 20% year-over-year spike in the number of active listings, and listings overall are up 73% from the bottom. This right here tells you that the bubble has already imploded, and now is just a matter of time before reality sets in for sellers. The days of multiple offers are long gone here, and very soon we are going to see neighbor undercutting neighbor, homes sitting for months, and prices falling off a cliff. Now, of course, there are plenty of factors at play here, but you can already gauge just how seriously overpriced and bubbly this market is by looking at the comments made by major home builders. I already went over this in my last upload, but home builders are, in my opinion, the best way to get a true sense of the market, the reason being simple human psychology. People who sell existing homes have a very hard time accepting losses on their equity, especially if a neighbor sold for a higher price in the past. Non-distressed sellers, meaning those who don't have to panic sell due to life circumstances like death and divorce, would rather take the house off the market before accepting a major price cut. This makes existing home prices extremely sticky and often delusional at times. There's a reason why currently in Florida you can buy a new home for just about the same price as one that is 50 years old. And that's because new home sellers are massive corporations who know how to move inventory, even if it means making quick cuts to the price. They are not bound emotionally to these houses, and the people there answer to shareholders, not families. So what are the home builders saying? Well, for example, KB Homes directly acknowledged in their last earnings report that Florida was their softest market in Q1, and this is part of the reason why their stock price is down around 40% just from September. That's not a correction, that's an all-out crash, and if you know anything about the stock market, it's one of the best predictive machines out there. Just zoom out on KB Homes stock chart and you will see exactly what I mean. From 2011, this company was up 1,200%, but if we go back to the early 2000s, you start to see something eerily similar. Back then, KB Homes enjoyed the same ride-up as we saw now in the post-2011 period, but something started happening around 2005, which, as you will see, is years before a crash became apparent on the national level. Now let's ask a simple question. At what point did most people realize that the last housing crash was actually happening? If we look at the Case-Shiller Index, which tracks national home prices, we see that the US national market peaked in the summer of 2006. As prices began to decline, the mainstream narrative was that the market was simply cooling off. Nothing to worry about, just a healthy correction. Fast forward 1 year, prices were down about 2 to 3%. Even though subprime lenders were collapsing left and right that summer, the message from Wall Street and the media was the same. The damage is contained. Nobody, and I mean nobody, was calling it a housing crash. But if you had been watching the stock market, you would have seen the warning signs much earlier. Take KB Homes, one of the biggest home builders in America. Its stock price peaked in 2005. By 2006, even while home prices were still at all-time highs, KB Homes had already crashed 45%. Wall Street was pricing in the future, and that future hit hard in 2008 when home values across the country started falling off a cliff. By 2011, prices had dropped nearly 30% nationwide. And here's the part that should make you nervous. Today, we're seeing the same setup. The Case-Shiller is still hovering near record highs, but KB home stock is already down over 40%. That's the market flashing red. And if history is any guide, the pain in housing hasn't even started. Most people living in the Northeast and Midwest have no idea just how bad things are in the South. It's a complete shift from the 2021 and 2022 market. The buyers are in complete control, and selling houses requires massive cuts to your price, concessions, and pain. Take a listen to real estate broker Ben Grieco explain. He's very honest with the way things have been going in Southwest Florida.
Getting back to what's going on the ground here in Southwest Florida, negotiations and deals are still kind of ugly. I mean, it's some things, sellers are getting really beat up. I mean, like you guys know, buyers run the show down here. It's brutal in some cases, the things I'm seeing. So this year has really seemed to reshape the market. It didn't happen as drastically last year, at least across most of Southwest Florida, but this year has solidified 21, 22 pricing, maybe even 23 pricing is pretty much out the window across all property types in and around the Southwest market. It's just, it is what it is. And there is the hope that delisting and coming back next year changes things. I don't know. I can't see that happening in the short term, just the way things have moved, but it's everybody's personal decision to make. If anyone's been paying attention, watching this channel, really anyone that covers Florida, you know by now inventory's through the roof, not just in Southwest Florida where I focused most of my videos, but statewide. Climbing in a lot of metros, not as severe. Obviously, it's kind of a mixed bag across the state, but there's no way around it. It's the highest inventory we've seen in 5 years, maybe a decade or more, statewide and in some areas.
So what do you think this all points to? We've got home builder stocks crashing, inventory surging, sellers slashing prices, and yet most of the country still thinks everything is fine, just like they did in 2006. But Florida is flashing a warning. It's not a prediction anymore, it's happening. And if history has taught us anything, it's that when the cracks start in one part of the market, they eventually spread. In 2007, it started in the same sort of way in the South and spreading to the rest of the country. Today, it's Florida again, and tomorrow, it could be your market. So whether you're a buyer, seller, investor, or just watching from the sidelines, you can't ignore the signs. It's simple pattern recognition. The housing market doesn't crash overnight. It unravels slowly, then all at once. One county sees a dip, another sees a surge in listings, and before you know it, the whole region is underwater. The signs are everywhere: rising inventory, price cuts, and seller hesitation. As always, thank you for watching. Don't forget to hit that like and subscribe button if you enjoyed it. And if you're a buyer or seller in Florida, let me know what you're seeing on the ground in the comments below.